All right, guys. This is Small Caps Trading Podcast. This is Mali. Today is May 12th. We are gonna go over S1 trades, but before then, as always, nothing we talk here is a financial advice. Do your own research. Mom, you wanna take over?
Yes, sir. Thank you. Thank you. So let me go ahead and share. Today we're going. In this particular video, we're going over the S1s. We had two S1s this week that I've noticed. It was TIVC and AEMD, and they were both Maxim S1s, and Maxim, obviously really knows the game. They were bought out by some international, group about a year ago or so. I don't remember now when that happened. And I've been trying to, when they were bought out, I was trying to figure out, are they going to still, be doing the same kind of business, where they pump the stuff that they underwrite or not. And it's always dynamic, So, in any case, TIVC came around on this day here, right? And it had a S1 ready to go. S1 was ready to go, man. No amendments needed, whatever. And so when this, let me just.
So when you say ready to go, we had a conversation. You said you want amendments, and when you say no amendments, ready to go, what do you mean?
No, I didn't say that. I said no amendments needed.
Oh,
That
so
means
yeah.
it's ready to go.
So you mean they're already amended, right?
Yeah, they're ready to
Yeah,
go.
yeah. Okay, just to
They
clarify,
could
yeah.
they could drop pricing at any time.
Anytime, yeah.
Yeah. So when this shows up pre-market, and this was, what day was this? This was Wednesday,
Yeah.
right? So on Wednesday, this shows up, and we're like, okay, it's S1, it's Maxim, it's ready to go. So and you see sort of the pre-market volume. You're like, as soon as this comes up on 100,000 plus, you're like, okay, cool, Maxim is gonna push this. And I didn't trade this because I thought to myself, okay, here's the initial push, here's hopefully the sub VR trap. Now let's see. Now I borrowed it, and I was like, okay, let's see, where do they sort of exhaust out? Where do you have like maybe a clear out of highs or some sort of a fail, like something, right? Like
Yeah.
anything. And then it never really came. And I off the open here, I thought maybe here it's coming, right? There's that 1 million volume candle at the VWAP. I was like, come on, baby, give me something, and they didn't. And I was very disappointed by this. And I remember I was talking about it in the group, in our little Discord thing. We're talking about volumes, and we're like analyzing how much volume would they need, because I think they were like, it was like something ridiculous, like a 2-3 million market cap, trying to raise like 10 million with like 100% warrants or something crazy like that. And so I was trying to be smart about it and say, okay, well, they need this much volume to be able to raise this much money on this much market cap, right, and all that stuff. And none of it materialized. It just faded and faded and faded. And look, I'll talk a little bit about the volume discussion that we had, and then we'll come back to this. But the volume discussion basically was, look, they want to raise $10 million. So presumably that, while it's trading at around the $2 mark, right, sort of the $2 area, you're like, I was like, well, they have to. So let's say they want to sell 5 million shares at around $2, which will raise them the $10 million that they want to get. Then they need at least 25 million volume, because let's say that they want to be all of the sellers on the tape, right? Then they still need 10 million. They still need 10 million volume, because they need 5 million. It's basically, the math that I had was that like the most you could be is about 20% of the volume. Is the most that any one player can really be, realistically speaking. Um, so so we were like, okay, so they need to have at least like 30 million in volume. And so all that, sort of theorizing, uh, it got me to not trade this. And I was looking at this, and the whole idea of generating volume for a pump for a dilution is so that you can sell. If you don't generate the volume and you sell, you're going to drive the price way down. And that's exactly what happened with TIVC. If you look at TIVC, you see that they traded well below their pricing, right? Like they went like 30, 40% under pricing. Why? Because they never generated the volume needed to dump this without absolutely smashing. Look, you're going to smash the price regardless, but like the reason why the underwriter pumpers do the pumps the way that they do is so that by the time that they could sell the stuff at pricing or better. But when you don't generate the volume and you still want to sell, then this is what happens.
So
Um,
let me ask you. So if someone watching this, right, they wanna understand the S1s. Like, why are they selling it before the offering? Like, why they need? Can you go deeper about
I didn't say that they are selling it before the offering. I'm saying is
like
that when you're
generate the volume? You were talking about
why do
generating the
they
volume, and then so
right,
they can sell, right?
right,
And then you said it went below the offering prices.
right.
Um, so because they couldn't generate volume. So did you mean? I guess let me ask you this: did you mean they should have generated more volume so stock can be at the higher prices so they can sell more at the pricing? So
or
what is
even
the
or
goal?
even if not I mean, it's just supply and demand, brother. If you're trying to sell something and nobody wants to buy, then you got to lower your price until you can sell it. And when you're trying to sell a dilutive offering, nobody wants to buy that. So the way that you cause people to buy it is by creating this bullshit pump, some bullshit PR, and then people might be willing to buy it. But you have millions and millions of worthless paper to sell, so you need a lot of buyers, right? And when you create a pump, S1 pump that has a developed pattern, not just this nonsense, but like some sort of a an initial run, then some sort of a hold, then some sort of a clear out, then some sort of a walk down to VWAP, some battle with VWAP, then finally a phase. All of that activity is areas where you can sell, and there's other counterparties that are trying to guess. People are trying to play this. Maybe it'll bounce. There's all these counterparties, creates all this volume back and forth, and in that back and forth volume, you can either hedge short before the offering or sell or whatever it is, without going too deep into every particular dilution mechanism. But once that activity is there, you can sell or hedge or whatever. When you don't create all of that activity from other participants, when it's just you, and then you don't offer anybody any real reason to like play this long or short, to get stuck and fight it, then there is no real like buyers here. So you're selling and you're constantly hitting the bid. You're constantly hitting the bid. So the bid gets lower. You hit the bid, the bid gets lower. You hit the bid, the bid gets lower. Finally, pricing comes, and you're trying to raise $10 million. Either you're going to absolutely smash the bid, or you're not going to raise the money you're trying to raise. And so that's what happened here. And that's we're sort of going deep into the weeds here. I don't know
Yeah,
that this is helpful. I'm glad to answer some more questions, but all of this really is just this video is not meant to be this sophisticated, to be honest with you. It's just like, here's the deal, right? Like, I'm gonna put it as simple as can be done. Okay, a second. This is what I really wanted to talk about. I didn't mean to make this as sophisticated, because this really isn't as sophisticated. What I wanted to show was pretty much this. So TIVC and AEMD. So TIVC was an S1 maxim on Wednesday. Um, and AEMD was an S1 Maxim on Friday. They were both S1s. They both came from the $1 area. They both ran to, this one ran to the mid twos, this one ran to the mid threes. So actually, this one had more meat on the bone on it technically, but they sort of came from the same area. They sort of went to the same area. They both had the exact same price action, which is the initial push in pre-market without much, ado to it. This one doesn't have view up on it, so you would have seen the view up. Let me add view up to it so you can really see. Right, so this one only starts to view up. In any case, doesn't matter. So you see, like, they both popped pre-market sort of on a single leg, and they just completely gave it up. And then as soon as open showed around, you could see the 1.2 million candle push it open, the 1.2 million candle push it open. And so you see exactly the same action. That's really what I wanted to get into here. And so, when I saw TIVC on Wednesday, I didn't trade it because I waited for something that didn't come. But when AEMD came, when TIVC came, we knew S1, ready to go, Maxim, and I waited for something that didn't come. When AEMD came 2 days later, we knew right away, S1, Maxim, ready to go, right? And this time around, I wasn't going to be fooled. And so, as you well know, I pointed out when AEMD came, I was like, S1, Maxim, ready to go, just like TIVC. TIVC was a total waste of borrows. Let's see if they play TIVC, if they play AEMD the same way that they did TIVC. And this time I was short, and I kept on saying, look, I kept on comparing them at every moment. I kept on, having charts up, if when we were here, right, then I'd have this up, right? Pretty much when we were here, I'd say. And I kept on like comparing them, right? And I was like, but this time I'm already short AEMD because of my miss on TIVC. And I said, as long as this acts exactly the same, I'm gonna trade it exactly the same. And so when that 1.2, when that 1.2 million candle showed up over here, I was like, you gotta be kidding me, man. This is awesome. And I kept on trading it. As long as it acted the same, I traded it the same. And I went for exactly what TIVC did, and I got exactly what TIVC did on AEMD. And AEMD is staring down the barrel of the same problem as TIVC, which is they didn't really give it the all good liquidity pump. So, they're likely to trade below pricing as well, come, say, Monday, Tuesday.
This part I understand. I just wanted to know. I don't know. Maybe if you know this, you might thought that might be helpful. I think it's a very interesting dynamic because I asked, so they are selling before. You said you don't think they are selling before, but so they are selling it before the offer.
What does it matter? How does it help you trade? Like how like you're seeing a pattern over here that's like how is your question helping you trade? Honest question.
This is not a really trading question. I didn't know this was a every trader should know, and I always thought they are probably selling, but you said they are probably hedging it. So this is just me asking: can they sell before the offering, like the company itself?
No, they can hedge before the offering.
They can hedge before the offering.
Right. So they can hedge. They hedge short. So when they're creating the dilution pump prior to the pricing, no, they can't sell, but the book runner can hedge short. So he's creating. It's a way of locking in the price. So he's creating this. So the book runner, the underwriter, is creating this this pump, right? So if they create a good pump, and Maxim does know how to create a good pump, by the way, they just must have not been, financially motivated to do that in these cases. They might have gotten a sort of a lower tier deal here or something, but, they create a pump. They know they're creating a pump. They know that they're creating this more usually for the liquidity. so that they can, have liquidity to sell into. But sometimes they don't, like this was a real weak pump, right? And so one of the things, and I can't speak for what they're doing, but I can speak that one of the things that they could be doing is, hedging short over here, so that when they do sell, they can whenever they are selling the offering, they can sort of capture the difference in price between here and when they're selling the offering. So they might not care to smash the bid because they're already hedged short. But the question is, how much short could you even be hedged? Because it just wasn't the volume wasn't there. So the answer is, I don't know. But and while this is interesting, and this is more of a conversation for Steve, when we bring Steve up here and do like a deep dive for like S1s, he'll be the guy, and you could really go deep into it. But I'm a trader. All I am is a price action trader. You know
Yeah,
what I
okay.
mean? And so for me, when I look at this, and then I know it's Maxim S1, and then 2 days later I get another Maxim S1, both of them ready to go, and I just see this pattern. I'm like fool me once, but second time around I see it. You know what I mean? And so the
Yeah,
trade was really just looking at these two. We're
yeah,
looking at TIVC.
yeah. I mean, as far as the price action and the similarities, yes, I think this video is very helpful. Like that, this is the main topic we are discussing. It happened and it happened again, and then you were able to capture it. It is
On
just
the second time, not the first time.
yeah, on
Wasted
the
borrows
second
the first one.
on the second time.
Yeah.
The reason I asked that, but you're right. Maybe I can ask Steve when he comes. You always say you gotta know the story, the vehicle you are trading. Like we always talk about this. Like you gotta know the story, and you were talking about things that I kind of know, but I don't really know. So that's why I wanted to go there a little bit. Like,
Right.
wait, what do you
So
mean there? You know?
Right. So I always tell you there's three tiers of knowledge that we have as traders. There's things that we can know and things that we cannot know. But the things that we can know is divided into two, therefore the three categories. What are things that we can know that help us trading? What are things that we can know that does not help our trading? And what are things that we cannot know? Right? So we can know that there's an S1 and that the point is to dilute and it's going to go down. We can know that. And so it helps us trading because we're like, if something has an S1 ready to go and it's pumping, yeah, that's a short today. Versus say SGBX, there was an S1, but it wasn't ready to go on the first day that it ran. So that wasn't the day to fight it, right? So we can know that it's an S1. We can know that it's ready to go. That helps, or not ready to go, and that can help us put a trade or not put on a trade. Say TIVC AEMD ready to go, SGBX Friday on its day one, big day, like a week and change ago, was not ready to go, right? So these are things that we can know to help us trade. As far as the book runner and the volume that they need, and are they straight selling or are they hedging before they sell and all that stuff, man, that'd be great. Like I'd love to know it like in a real great way, and if I will know it deeply, then maybe I can find a way that it helps me trade. But since it doesn't really help me trade, then I'm like, I mean, look over here on day one on TIVC, I look so, I talk so much about the volume and that they can't really sell all that, and that's something that you can know that doesn't help you trade. It took me away from the trade. I didn't trade it because of this. I didn't realize, oh well, maybe they don't give a damn and they're gonna smash the bid until this thing goes double digit percentages under pricing. Who would have guessed? Right? You just don't know. But the only thing you do need to know is you look at the pattern, you're like, this is the type of pump that they were willing to do on this. And when this comes, you're like, well, 2 days ago, on nearly the identical situation, same underwriter, same, S1 ready to go from similar prices to, you're like, okay, I see that this is what they're willing to do right now. I don't know why. I don't know. I don't know, but I see that this is what they are willing to do right now. So if this is what they're willing to do right now, and they're showing me that they're doing the same thing here, then I'll trade it. I'll be wary, of future S1s from Maxim being exactly like this. After two that are exactly the same, I'll have a reverse psychology sort of approach to the next one. But you know what I mean? There's things that help you trade, things that don't help you trade. You know?
Okay. Yeah, I mean, I understand. It's sometimes I do see you avoid things because of these type of knowledge. You'll be like, "Oh no, man, this is too much for us. They gotta run this more," and then you won't short it. I thought
Right.
this was one of them. Maybe it could have helped you. This one it didn't, but maybe in the future episodes, if I see that in real time that you like, "No, man, this needs to go more," then I will bring up maybe this example and maybe we
But
can
it is that
compare.
it is that I did say exactly that on TIVC. I said, "Nah, man, I think they got to run it more," and that's why
Yeah,
wasn't involved in it, and I was wrong, right?
yeah,
So, and the reason that got me to, and look, you're right. A lot of times, look, I take all of the things in my brain and I put them together and I say to myself, yes, trade, no trade. I think they have to run it more. I think they don't. Like on LiDAR, I was like, from low of day, I was like, they got to squeeze this. And they did. On TIVC here, I said, they got to run this more and they didn't. You know what I mean? So, like, you take all of the things that come together in your brain, you combine that with the price action that you're seeing, like all of you, like you bring all the big picture in your mind, the things outside the price action, and then you combine it with the price action and you do your best. My approach caused me to miss a lot of trades, but it also causes me to avoid a lot of squeezes. And so what I end up with more often than not is one of two things: a missed opportunity where I'm sitting over there and I'm like,
mm-hmm.
or I end up shorting tops because I waited and waited and it did squeeze and it did squeeze and then I was there at the top and I wasn't squeezed out. So it does cause that, but as I tell you often and I want to tell everybody else, nobody knows what's going to happen. Nobody knows what's going to happen on this ticker in a few minutes or on this cycle in a day or two or tomorrow or a pre-market mover. Nobody knows what's going to be happen. Once real regular trading hours happens, nobody knows, man. So we're using all this, me trying to teach you and us trying to share our knowledge with everybody else. It's not I know and this is it's here are the categories of the moves that typically happen. Here's how S1s behaves. Here's how day ones behave. Here's how this behaves. Here's how they behave when they do this iteration when they're strong. This is how they behave when they do this iteration when they're weak. And all we could do is try to have enough of a body of knowledge so that we can react in real time and constantly be dynamic. And so on TIVC, my knowledge that I came with worked against me, but on AEMD, my ability to adjust quickly on AEMD, I was like, okay, seen this 2 days ago. I got the blueprint on how to trade this. I'm gonna follow that blueprint until it tells me I shouldn't, and it never told me that. So you know what I mean?
All right, cool. I mean, if yeah, fair enough. If you don't think that's helpful that much, then we don't need to go dive deep in it. I just thought
What
that that was
like
really important.
the hedging and where they sell and stuff like.
No, I mean, I always ask you, but I guess you're right. This might be the topic for Steve. I don't even understand. There is a manipulator. They start right. So those guys start buying with the algo. Like their cost base is that, and then you're telling me, oh, they are also hedging. So the guy who bought is hedging. This can go so in deep that we
Exactly.
might.
How does it help us trade
Yeah,
when we can just look at a pattern and
yeah,
with our eyes see everything we need to see between these two? You know what I mean? So it's cool
yeah,
to have that knowledge about the back end, and sometimes it's helpful, but it's I like trading is about trying to go into the weeds as much as possible, learn as much as you can, and then simplify it. Ultimately you're looking to simplify everything that you've like all these many variables that you're learning. You're looking to simplify it to something that you can use so you're not stuck with paralysis by analysis, right?
yeah.
So
Okay.
for me, like S1s that are ready to go, when they pump in the pre-market and they are ready to go, I'm short. Like okay, TIFC I wasn't. But like generally speaking,
Yeah,
S1 ready to go, pump the day when it's ready to go. That's a short, man. All you gotta do is pick your spots. So on TIFC, I picked a spot that was higher. I said I wanted higher. That's the spot I picked, right? And I didn't get it. And on AMD, I was like, oh, you know, like either way, I'm borrowing as soon as I see it because it's S1 and it's ready to go. So that's as simple as it gets. It's simple, as simple as it gets. But on AMD, I was like, I don't think I'm going to be able to pick my spots because I saw how TIFC is, so I'm just gonna, you know what I mean. But there will
Okay.
be in the future. In the future, there will be S1s that will, give more complex patterns, and we could talk about those patterns. Or there will be more special situations where it'll be maybe like, 200% warrants or some other thing that's really worth mentioning in the fundamentals of it, or the filings of it. And we could be like, listen, man, when this had 200% warrant, I was like, I don't care about the price action or some shit, you know what I mean? But for
Yeah.
now, these were really simple S1 pump jobs. And I mean, they're honestly, this is the best. It doesn't get better than this as long as you know,
Yeah.
because what makes it so great is that it just dropped and it never stopped dropping. It never tested you. It never. But the problem is that how are you going to know to be short something like that? Like, it's really hard to be short something like that. So, luckily for us, TIFC happened and then AEMD happened right after, and so we were able to have the blueprint.
Okay. Yeah, this video is gonna be 30 minutes. But last question, if
Shit.
let me know if this is applicable too. You saw AMD, right? You want to trade it. I want to
Hmm?
ask, um, different scenarios can happen. You have TIVC on your mind. Could you tell me if you remember like where you shorted and what would have taken you out if like I want to know the spots and what can you tell me if this happened? TIVC didn't do that. I'm out. Stop. I don't know if this
Yeah,
is a question.
great, great. That's a good question. So I was short everywhere, AMD over here. And then I was short here. And again, I was using this blueprint for here. And when I saw, and I just at this point, like I was so frustrated with Tipsy the other day because the bars weren't cheap on it, and I just wasted it. And so when AMD came, I mean, I immediately, and you've been seeing me all week, trade one thing compared to the same action a day or two before. I've been doing it all
Yeah.
week long because it's sort of been the same hands at play, on different things. Like, this one type of algo was working a couple days in a row. Maxim was working a couple days this week, so you could see, like, there's all sorts of things where you could see it's the same person doing the same job. So all week long, I was saying, okay, I missed on that one before, but I see you putting the work in here, and I'm gonna get you on this one. And so with AEMD, I was short here and I was short here and I was short here. And to answer your real question of where was, you know, um, the whole time I was saying if this acts differently, then I'm out. So on AMD, this was the big test. This was the big test in pre-market for me when I was like, as long as it does this and it doesn't do a reclaim, right? I'm good. So it didn't do a reclaim. If it had done a reclaim here, let's say it goes from here and then starts to up, and then starts to trade here. At that point, I would have assessed risk. But because I was trading this compared to this. So I was never like, I really had the most size I wanted to have over here. I mean, I kept on adding, but like I added the most over here because, I had all of this in mind, and pre-markets, you never know. So if it had like reclaimed, maybe I would have like depending on my size, I wouldn't have necessarily been out. Maybe I would have like shaved a little bit and be there with like a little bit of size just so that I have a feeling and like, see if
Mm-hmm.
I sort of played it based on how it went. Like then if it like reclaimed and then failed the reclaim, I'd have added. If it like based affirmed the reclaim and gone, I probably like, you know what I mean. So it depends. But but this to me was the biggest test. I said, no way in the world are we getting the same exact offer open where you get that million plus candle that you could really size into. And sure enough, you did. And I was like, you got to be kidding me. This is really going to be just exactly the same. And so what I got here was confirmation that we're getting it exactly the same. And again, so this would be a moment where if it firms up, reclaims, bases, it starts to go, I would have been like, no, not the same. So here and here is the two areas that I was making sure that it behaves the same as here and here. And as long as it did, I was cool. And as soon as it wouldn't, I would have obviously reassessed.
I see. So did you add it on that bounce green candle or as it is moving
Here?
down in your red? So third minute on that volume candle, yeah. Or you were just like
Now on the so it would have been, well, both, but here when I started seeing that the candles, approaching the 1 million as
Mm-hmm.
sort of it did here, I was already here. And you always hope for higher on these ones, particularly on these S1s.
Yeah.
You hope for higher, but when you like the sort of the trick, same as like XBP, like the trade on XBP and the trade on um I forget what was the other trade that did exactly this. CPOP, right? There's a moment where you see that they're really trying and that they can't. In that moment, it's not exactly necessarily the best risk reward moment or the best area is of the pattern that you would like to get short full size, but it just happens to be the area where where I believe that they tried, showed that they couldn't.
Okay.
So that's the area that I care about, as you know. And so, I mean, I got short into the green candle and into the red candle.
I see. Because you said you wanted to see that they couldn't do it anymore. So I figured you will
Mhm.
put more your size into that red as it is flashing because that's like your
But
confirmation.
it's acting exactly the same.
Oh, so
I
you
mean,
you have in your mind.
exactly the same. And I mean, we were talking about this.
Yeah.
That I was comparing this to this every tick,
Yeah.
because we're talking about it. So I mean, it's acting exactly the same, exactly. And this is not my first or second or third or fourth or fifth year doing this.
Yeah.
I could compare stuff in real time. You know what I mean?
Yeah.
So
Yeah.
so it was acting the same. It was such a gift. It was an unbelievable gift.
All right. Fair. Last one. Target. Did you just hold this into the offering, or do you take off during the day?
Oh, I'm definitely holding. But no, I did take off during the day, right? So I took off. Like I mean, like when I was getting like below red to green, like below, you know what I
Yeah.
mean? Like when it went red, I mean, look, I took off some. I took off some here at the 120s, and here I took off a bunch. And no, man, I'm holding half into the offering. I mean, again, it's exactly the same. It's behaving exactly the same, man. And
Yeah.
again, the problem is that they didn't give it the good liquidity job, and so like it's not like where it's like, oh, they didn't shake out the shorts, so this is probably going to come back because it wasn't a good shake of shorts. It's true that there wasn't a good shake of shorts, a shake out, but there wasn't an area for them to really get in. You know what I mean?
Yeah.
Like it just died. So either you knew to be there or you weren't there on the short side. So it's not like I feel like this is something that has to shake out the shorts before. Nah, man, they got a liquidity problem, just like
Yeah.
TIVC had. So good luck to them hitting the bids, in my opinion.
They gotta look at the problem. All right. Cool.
All right.
Well, thanks you guys for watching. We call it.
Yes, sir.